Morning traders. Well, on a day like yesterday, a spinning wheel, what goes up must come down is a perfect song to start with. I like that song. So, anyway, let's see. Can you see my screens and hear me okay?
Looking good and hear you loud and clear.
Hey, Mr. Kyle. Nice overview this morning, as usual. And let's take a look and see what we did yesterday. That was pretty crazy, right? All right. So, first one I want to point out is when you have these huge extensions like this, single prints, undeveloped areas, eventually, when we get back down into uh, this zone, the market tends to gravitate to fill these single prints out, right? This was where we had some sideways balancing for a little bit, but for the most part, we had higher highs for through the month, second half of the month. This was the high of the year, did not come down and go below the previous month. So we still closed higher this month. And don't forget, yesterday was the last day of January, which January is kind of like the barometer for the year. And so we closed up, not huge. We came back, but this was the high from the 29th in December, which was this um, also the high of the year, right? New all-time highs. So we came close to getting down pretty around that 48, 41, which was the high on the 29th of last year. Did not get there, but pretty close, 20 points, right? So we are watching this closely, and this FOMC, let's just go over one thing here. I'm going to open this up so we can look under the hood. And this is how the candlesticks, the 30-minute bars looked. And this is, of course, collapsed, right? So I don't like chasing the FOMC uh, release right when it comes out. As you know, I like the second reaction. I think the first reaction for me is a little bit more for the you know retail, where they knee jerkish. The big firms don't and institutions don't come in and go, oh, he said this, let's sell or let's buy. So this was the first reaction, right? Let's see, maybe I can use a different, I'll highlight it. Okay. So this was the first reaction down. We waited to get in, on the way up. And you can see, um, let me actually do this. This is really from this point on is when the FOMC release came out. And what do? We did completely the opposite, equal swings right back up. And that's so typical of the FOMC, the unemployment, some of these bigger numbers. The overreaction down causes an overreaction up, and we came right back down to the middle. But once we got back in the middle, of course, as the day or the half an hour went on and the questions and answers came out, spooked the market and took us down. All right, so let me clear this up for a minute. So what we're doing here in the aftermath of something like this big extension is probably going to do a little healing, trying to fill out these single prints. We're doing the perfect cave fill here during the Europe session. You can see Asia open up a little higher and uh, Europe went higher. This is kind of like the middle ground, the over under for me. Um, And as long as we're above the pivot, we can, do a little work inside this. When the market opens up, I imagine we're going to fill this out uh, a, a bit so that between that 97 and maybe the overnight lows, right? Now, the overnight low, hang on one second. Gotta move a couple things out. You can see is the previous week low. Last week's low is where the overnight session Asia uh, tested, right around that 48.72 area, which was important. We did a little spike reject and close pretty much right in that area. So we're trying to heal here a little bit, which is normal after a big down move. And we went on the the Europe high, went right around that 48.96.97. This was the breakout zone when after the FOMC came back down and took out the report bar low. And so some balancing inside here is probably what's going to happen. You might just get a little two-way trading trying to fill out this, uh, the cave from the US session, which is these single prints, right? So you can see like this area right here, do a little back and forth. And if they do take out the previous US session lows, then we've got probably a test of 48.41, which is the high of the year from last year. Don't know if we're really going to do that. We had a pretty big extension. I think the market's going to just try to digest the move and do some balancing. That's usually what happens. If by some chance we get above 97, let's say even better yet, this area here, 49.01, that was a big area yesterday, 175 to 02 even. Then you could see the market actually get back up to the high volume node right around that 49.15. Don't think it's going to happen. I think the market's got a little healing to do, a little digesting this move. And usually that's what happens after this long extended push down, a little overreaction to the downside, right? So for right now, my pivot comes in right around 86. That's the point of control. As you can see right now, it just turns out the point of control for Europe and also the high for Asia. So kind of a good flip zone. I think they get back above, 86, call it 80, actually 87. And you can see the market kind of try to rally up and test the Europe session high, the overnight highs. And as you know, there's a real high percentage that we test either the overnight highs or the overnight lows. So I would expect that probably to test the overnight highs before the lows and get a little bit of a quick pop and see if we can get above it. All right. All right. We'll come back to the ES before the opening. Let's go to the behind the scenes here and look at this crude. So the crude had a nice rally, right? If you look back here, this rally started from down here, and we made higher highs, little balance, higher highs, and then this was a trap up here because we had a poor high in the US session, and Europe opened up higher, sold off, closed below this high, and on this day, the US session could not test this high, so left the overnight highs, recent new highs, and this top in the ES or the overnight session, which is really a trap. Usually, and you suckered in a bunch of longs up here, and you could see what we did. We balanced on this US session day, which was really Tuesday's high. We couldn't take out previous week's high, US session high, so we left these this top up here that eventually we'll get back up there and test, but that's a bull trap. All right. So meanwhile, we did get down and take out the last we tested the last four US session lows. So they did shake out some of the week longs. I do feel like the crude can still push back up at some point. We did take out the overnight highs. I kind of like the crude today. I think unless we get back below 75, 80, 85, the pivot, previous point of control, the bottom of this value area, the market should continue higher. The overnight highs just got taken out early this morning, and we're now back in the middle of this U.S. session opening range. Point of controls right here, kind of just hanging out, but I think eventually we might go back up and retest the highs. Now on the other side of the coin, we're in the middle. The pivot comes in at the 75.80, so could fill out this area a little before we go higher. Most of these markets are gonna try to balance a little bit because they had some pretty big moves. Let's take a look at the gold. Gold is kind of similar in a sense, where I like the gold. They protected this little spike down here, kind of held this little shelf. As you can see, we had this coil and started this move higher, right? Now, yesterday, like the EC, the bonds, and the gold are like cousins lately, and been for the most part they're usually correlated, and then until they're not, but they were correlated again. They sold off like the bonds in the EC, and then came back. So for the most part, we could do some two-way trading here in the gold, but I think the gold will test the overnight highs similar to the crude, kind of moving back up. They tested down here, uh, did not take out the overnight lows, and now we could test the overnight highs. So 2067.68 is probably in the cards, at least the test up there. Currently, we're moving that way. And the pivot is the point of control from the overnight session, but it's also the top here where we did two tests and the inside cave, and you can see this high back here. So it's been a very important area. So for me, if we get back below 58, 2058, then all bets are off. We come back down and go in the other direction. Currently, this is where we're probably heading. I don't see why not. 65 to 68. It's going to be kind of like this area where the market could test and possibly hold. If they do get up above 2068, then we're going to test yesterday's US session highs. All right. So let's see, that high was 2074.60, right? So let's see how far the gold wants to go at this point. It's moving pretty decent, but we'll let the market tell us after the openings, US opening. All right, so let's take a look at this EC, right? So the EC did the same thing as the bonds, had a for real good reaction down. As the gold in the bonds. And now you can see it's moving higher. It did take out its overnight high, and it's kind of staying in this zone for the time being. I think if it takes the overnight lows out down here, all bets are off. But this big area was a liftoff area from way back before. And this is a little trappish that the overnight market made a lower low and then closed way up here. So chances are you're going to see a push up to the pivot, which is 108.58. If they get on the other side, then we can continue higher, and then we test this 108.68, which is the 200 daily SMA. So chances are the pivot can get tested. I don't know that we'll get quite above it. This has been a rough ride for the EC. You can see very, 2 days down, one day, balance or up, 2 days down. We had this up, and then yesterday's FOMC kind of spoiled the party for the time being. But I think we'll get back up to the pivot. Now you can see the bonds when bonds did this. Originally, we opened up and then we had a little bit of a whipsaw for the FOMC, but the bonds held up really good considering. You can see how this looks. You can see the FOMC when it came out. We had a little, dip, came back, tried to retest it, couldn't hold it, and then the market rallied. It closed on its highs. So pretty resilient considering the other markets took a hit. Now you can see we're moving higher. Now this area up here is going to be good resistance in this red zone all the way up to 24.10, 23.28 to 24.10. I think we could test it possibly 23.27. You can see we're retesting a previous 30-minute high. So 23.28 is in play at the moment. The pivot, it just so happened the PLC from yesterday and the pivot comes in at 122.15. You could see the overnight session respected the pivot. So we're continuing to pop, and you could see here we've had quite the rally going, and this is now 5 days in a row higher highs in this in the bonds, right? So all right, so let's go back to our main drawing board here, get ready for the opening. We got 8 minutes to the opening, and we should have some fun today. I think today will be more in the line of kind of a scalping day where the market's going to try to balance. You can see here what we did. During the number, we had a little quick up and down, no biggie, rallied back to the inside pocket. We're holding that. Let me just do this here. All right. So this is where we're at, and you can see this is very much the value area that I just put in for close to the value area. Actually, this was the top of the value area. So we're just doing some back and forth, a little coiling, and we'll let the market put in the first 15 minutes. That could tell us a lot more. You can see getting some wiggles and jiggles here. Here's the gold. The gold's moving higher. We're coming back down in this crude to the 8 o'clock opening price, 8 o'clock reading. So this will be a good test. If we take out the morning lows, and we can go to the other side. All right, so let's get ready. Okay, take a quick look here at the 120 minute to give us a kind of step away look. You can see this big extension down that we had in the ES from yesterday, and now we've got this kind of a bear flag at the moment. We've tested the higher end, and now we can possibly come back down and test yesterday's, or get close to yesterday's low. We'll see. At this point, you can see right now we don't have a big range, considering the range we had yesterday, but it's a reasonable one where we tested this area here, held, and came pretty close to testing this previous week's low in the overnight lows. Actually, they tested it to the T. All right, I'm gonna grab some coffee. We got 6 minutes to go, and let's rock and roll.